Skyworks reported today. Shares are down about 4%. It does make some sense, but I think it's more of a buying opportunity than anything else. And the reason it's down is revenue growth did slow. In fact, it went negative. The reason I'm not too concerned is because this was kind of anticipated. It's kind of been put out there by the company. It actually beat expectations by a little bit on both the top line and the bottom line. As you can see in our graphic there, it beat by 1.8% on both the top and the bottom line. However, as you can see also in our graphic, it was a year-over-year decline in both revenue and earnings per share. Again, this was anticipated. This was told outright by the company. The industry has been very clear that it's a slowdown as we transition from 4G to 5G. It's not a big deal, okay? So, and by the way, Skyworks has been on an absolute tear. In the last year, it's up 77%. So a little pullback based on a little bit of a, not a miss, but just the fact that revenue went down. You know, I can see it. I don't agree with it, but I can see why some investors would just say, you know what, had a nice run, revenue growth's still down, maybe even algos, who knows exactly. You never really know, you know, what other people are thinking, and is it, you know, just one or two really big funds that maybe it hit their threshold and they don't stay in it if the revenue goes down. You just don't know. But overall, I'm not changing my hypothesis on this company. It's definitely positioned really strong for 5G in terms of both mobile phones and in terms of the Internet of Things, just things that are connected, and that could be bigger than phones. In fact, I'm almost positive it's going to be bigger than phones. So I guess part of the reason for the decline is 73% of their business is in the phone. So, okay, you know, you can only do so much with these phones, right? Without a new technology like 5G. So, not only going to pick up their phone revenue over the next few years as this 5G rolls out, the Internet of Things is also a big area for growth for them. So, I'm pretty comfortable, to be honest, with Skyworks. I'd see this pullback, what did I say, 4%? Actually, it's down 5.5% as I'm doing this. I just see that as a bit of an opportunity. It could trade down a little bit more before it goes back up. I can see that too, because it's been up such a run in the last year. So that would be normal, but I'd just be adding. That's basically the way I see it. So here's a quick profile of how we do things. As you can see, right around 2010 was when they really started to pick up. Returns were 11%, bumped up to the mid-teens here, got all the way up to 28. They were growing the business. Everything was just flying in 2015 area. And then really just, I think that's just kind of the peak of cell phone, really. And still did really quite well, but just not quite as well. And now we are kind of, you know, we are actually at a multi-year low in terms of return on capital. And normally we're looking for improving return on capital. But with such a good backdrop and explanation of what's going on, you know, with the 5G coming, this doesn't bother me. It just does not bother me. So that's our hypothesis on Skyworks. Quite like it. We're not changing our mind based on a little bit of revenue rollback or negative revenue growth. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.